All right, guys. Good day to everyone. Sorry for the delay. I had some little issues trying to solve coming on live. Um, if you can hear me, please just say hi. All right, so let's see what we can do today. What's recap we can have today. It's been a while. We've gone on live to actually dismantle whatever the chart is. For those that have been following me on my Telegram channel, we are always giving out tips on where price is likely to tend to. Okay, so if you're on my Telegram channel, we have a lot of charts that we have actually, a lot of tips that we have actually uh, shown, giving out on this Telegram channel. So for those that have been following me carefully, they have been enjoying one or two tips from me and adding to their knowledge. And I am glad that a lot of you are picking up very fast. And I'm very sure that with time, some of you will be better than me. Okay? You can improve on my strategy. And it's going to make a lot of sense for you. So, like I've always let you know, I ensure that my strategy gives me up to 98% probability of a winning chance. That is the extent to which I want to win the market. I want to win the market at all times that I enter a trade. So the remaining 2% can be for probably a minor loss, which I could be stopped out by my stop loss. Okay, so I try as much as possible not to give the market any chance to take my money. So, and I've been giving you this strategy. I've been giving you ways to carry out all these things so that you can learn perfectly from me. Okay, so what we want to do today is actually to carry out some recap. What has actually happened in the past on Bitcoin. Okay, what has actually happened. So what do we expect also to happen in the future? But first we will deal with what has happened in the past. Okay, so I'm using the Binance chart. You could use the Binance chart or go to trading view. Okay, you can go to trading view and and choose the currency pair, which is Bitcoin that we're actually working on. So the analysis is on Bitcoin. Okay, we are using Bitcoin as our major reference to this trading. Okay, so but you can use it to trade any currency like the Euro US dollar. Okay, you can use it to trade the GBP USD. You can use it to trade the US dollar, Canadian dollar. The strategy works for all currencies. Okay, the strategy works for all currency. So I'm gonna choose crypto. Just choose Binance, Bitcoin. All right, but I'm looking at the best charts that we can use. Okay. Okay, now what are the checklists that I use? These are my checklists. Okay, looking out for support and resistance. Confluence. What is confluence? Areas in time past that price has been rejected. Okay, as stops taken out. You will see clearly. This number 3 is very important. Stops have to be taken out. The more stops that are taken out, the more likely you are to have a reversal. Okay, all right, so then you look for your price action. Once you have detected the areas to which stops needs to be taken out, because it's not just about stops being taken out. We have areas to which price must get to, and these stops has to be taken out. Then you look for your price action. After your price action, you look for halfway through the price action. That is, the next candle that opens must go into the previous candle halfway. That will give you higher confidence, okay, of you making money from the market. If price can get to halfway of that move, of that previous candle, there is high probability of you making money and less probability of you losing. Okay, I will show you examples. Then you ensure you always set your stop loss and your take profit. It is very important. I've told you the reasons why you need to set your stop losses. Okay, it is very important. This is the strategy, but the stop loss is also included in the strategy so that your account won't be wiped out in case of a sudden or sharp move that can wipe away your account. Okay, so your stop loss will ensure that you have you are able to come back to the market with more power and more resources. Okay, all right, so and the last part is that you also set your take profit. You can have different levels of take profit. I will still throw more light on this take profit. It is very important. I will throw more light on this take profit as we go on. Okay, so now I said I want to carry out some recap, and I've been trying to search where exactly we need to start from, and thinking this is, which day is this? This is July 18. Okay, this is July 18. All right, so let's see what's happened on July 18 around this place. Okay, so you can see the structure here. Okay, you can see the structure. What is very important in our strategy is that you need to have a structure. Okay, you need to have a structure. You need to have a way to which price will move, and you'll be able to determine the next move of price. Okay, so now the structure is actually created by the number of stops that we have at a particular range. For instance, look at this place. You have stops here. Okay, you have stops here. This is already forming a structure, okay, of stops that needs to be taken out. Okay, so of stops that needs to be taken out. Now, when price decides to come to this area, price did not get to where the stop is in order to take it out. There's a reason for that. It's because of the stops that are here. When you look at the stops that are here too, you can see them. This particular candle took these stops out. Okay, so let's go to the main chart. Let's see. This is 4 hours chart on the 20th. 4 hours charts. Okay, this is it. So that we can see clearly. Now look at this. Now, this strategy does not use any indicator except your horizontal line. Okay, no indicator except your horizontal line. If you now decide to use a different indicator alongside with it, well, it is up to you. But from me, I don't use any indicator alongside with this strategy. All right, look at this. Can you see we have stops here, okay, and we have stops here. Now the takeout of these stops caused this reversal, even though it is a partial reversal. Okay, look at it. All right, so this is well. You can see the candle. This candle, this green candle, okay. Now let me delete it first. Let me be using this cursor that you are seeing. Okay, now look at this. You can see this inverted candle, inverted pin bar. Okay, took out this particular one, but that was not enough. We need to take out these ones. Okay, these two inverted pin bar. Okay, now which this bullish candle carried out. Okay, and the bullish candle too is also looking like an inverted hammer. Okay, so which qualifies for price reversal. Now it took out this two again alongside with all these candles. You can see all these ones here, we call them stops. All these ones here, we call them stops. Okay, look at all this area. Okay, these are bunch of stops in this area. Okay, now price will always move to take out stops. That is the essence of the strategy. And the stops that we're talking about has their formations. They have different kind of formations, and that is the reason why you always see that the chart is not is always changing. Okay, the chart is always changing. Okay, so now what is causing the chart to always change is because of the way the stops are created. The way the stops are created here is different from the way the stops are created here. Okay, so the next time price will be coming to this area, it will carry out another formation. which will be different again. Why? Because the way the stops are created there is different from the way the stops are created there. Look at this place. You also have bunch of stops in this area. Can you see? The way these stops are created is also different from the way this one is also created. Okay? Even though they may want to look alike when you look at the structure like this. Okay? Okay? So let me delete all this, everything. All right. Now look at the way they are. Sorry, excuse me. You can see. Look at this. Look at this structure here. Bunch of stuffs. This one too. Bunch of stuffs. Can you see the difference? This one has a parabolic curves. This is also parabolic, but this one is sharper than this. This one is steep. This one is not as steep as this. You can see. So the shapes makes price to also have different kind of move. Okay, that is this way we always have different kind of chart. Now, so the formation of all these stops is very important to us, and the way they will be taken out. So all you need to do is to look at all these stops, the different shapes, and how they are taken out. Gradually, you can develop another strategy with that. Okay, it's another area that I actually want to look at. Okay, so this is new for my strategy. Looking at the shapes of the formation of the stops and using it to determine what will happen next. This is new. Okay, so we are not going to dwell much on that. Okay, so you two can go ahead and research it, and you can give me feedback. Okay, all right. So but I've given you one powerful gist on the formation of stops that gives different movements of price, and they have to be taken out. These shapes will also determine the way to which each of them will be taken out. Okay, so research it and give me feedback later. All right, now, but from my normal strategy is that I use horizontal lines to determine the takeout of the stops, to measure the preciseness of the taking out of the stops. For instance, let's start with this area. Okay, look at now this gray bullish candle took out this candle. Okay, took out all the stops here, all the stops that are here all together. Okay, fully. Now it was followed by what? A bearish engulfing candle. This candle completely swallowed this. Now this inverted pin bar, inverted bullish candle, is already giving us a clue, even starting from this bearish inverted pin bar. This is the first clue that price is trying to reverse. Okay, now this inverted pin bar only took out this particular candle, these ones, these two here, which is not enough because we still have stops here. You see, there's something that once they start a journey, they always like to complete their journey. So there is a journey that they were after in this area, which was to take out all these ones. Okay, so once it is not yet completed, they will find a way to take it. Okay, so which is what they have done with this bullish engulfing candle. It was closer to them, so they needed to take it out. It was closer, unlike the ones there, it's still further. These ones are closer to them, so it's easy for them to take these ones out. So they use this bullish engulfing, this bullish engulfing candle or inverted hammer to take this one out. So after that, it was followed by a bearish engulfing candle. Now, because I know that these candles needs to be taken out, okay, this inverted pin bar has given me a first clue, followed by this second one. I can decide to say, okay, once price get to halfway of this bullish engulfing candle, I will enter a sell trade, then place my stop loss around this area, this particular stop here. Okay, so my stop loss will be somewhere around here, and change the color. Okay, then I'll look for my take profit. Now, there is a way to which I told you that you should always calculate your take profit. Okay, normally I say that you should look for double of your stop loss. You look for double of your stop loss if you are in a favorable direction. Okay, how do you determine your favorable direction? You know that there is a push up in this direction. You can see the candles are big. You should know that any direction that you have to the downside could be smaller, okay, because of these big candles. So this will be considered as a pullback. So if you want to actually take profit in this direction, it's going to be something like 1-to-1, okay, 1-to-1. All right, so the only reason when you can decide to say you want to go for a double is that this area will have been taken out, because the journey is not yet complete. Look at, we've only, if this we are taken out, then we can say, okay, we can be looking for a double retracement, okay, a double of our stop loss. Okay, so you will make your profit to be double of your stop loss, which will give you more money. Okay, all right, so the journey is still on. So anything you find around here will be what? A retracement. Okay, just a retracement. So you need to be careful of the retracement. Okay, so until you're able to take major stops out, that is when you can say, okay, oh, let me look for my double of my stop loss as my take profit. Okay, so if you do 1-to-1 in this case, you can easily see that you will make you can make your profit. So like I said, if you now want to, if you want to use, normally this is the signal, this green one is the signal that's taking out this stop, okay, and giving you also an inverted hammer, so which can make you to say, okay, you want to go short, that is, you want to sell, take a sell order. So when price gets to halfway into this pin bar, you can click on sell order, then you sell, you make your profits. Correct. Okay, so this is somewhere here. Oh, sorry, we will start from your halfway of this pin bar. That's where we start from, halfway of this pin bar. Halfway should be around here. Okay, so then I'll place the line this point here. Okay, so you can see that we're able to meet. So this will be your take profit here. So that will be your take profit. Okay. So this line, the yellow line will be your entry. This is where you place your entry. This green line will be your take profit. Okay. This blue line is the stop. The stops that needed to be taken out. While this red line will be your stop loss. So you use your stop loss to gauge your take profit. Okay. So in this case, we are choosing taking 1 to 1. All right. So here you've taken halfway through. Okay. And that's using this candle to determine halfway through of this. If you decide not to use this candle to be as an halfway through, you can still say, okay, to get a proper confirmation, you want to get a proper confirmation of what is going on. You can say, okay, you are not convinced enough with this inverted pin bar to be your main signal. This is another signal, which is the bearish engulfing candle. This one gives you the capital yes that okay, this is a sell trade around this area now, because this is number 1 signal, this is number 2, and now this is number 3. So giving you 3 signals to go short. Okay, so now if you are taking this as your main signal now, so it means that halfway of this candle will be, and in this case, because that's giving you first, second, and third, first, second, and third signal, the probability that the next candle for you to get an halfway through will be very, very slim. So what you'll be having could be at least 25%. So if you see 25% into this particular pin bar, you can go for your shorts. Okay, so if the candle does not reach the probability that you even get to 50% is very becoming more lower. So but you can be sure of 25%, and you can see this meets more than 25%. At least this is up to like 30 to 35% of this particular candle. Okay, so from there you can take your shots. And if you are placing your entry somewhere around there now, somewhere around there, then your take profit will just be, because you also have to measure it. You have to measure it with respect to your stop loss. You can see the farther your entry, the bigger your stop loss. Can you see? Because you want your stop loss to be somewhere safer. Okay, because price can still decide to take out to go further. Price can decide to go further, like this area here. I used to tell my students this area here is also an important area, because this is a rejection area. So price can decide to test this rejection area. So if you have placed your stop loss anywhere around here, there's possibility of price hitting you. Okay, so a safe place you can decide to put your stop loss could be somewhere around there. Okay, you can see that because you are trying to go against price, in this case it's more difficult. Okay, but once you have a clearer view, a clearer structure, the probability of you making profit is higher. Okay, so that is what has transpired in that area. You see, in all these cases, now let me make it more clearer to you what has actually happened here. Let's bound it. I want you to see some things there. Now supposing I want to believe that what has happened here, if we, this is a 4 hours chart, if we take a 1 hour chart or a 15-minute chart, we should see more signals in this area. Let's check it. If you see more signals in this area via the lower time frames, it means that it is more the possibility of price actually falling is higher. Okay, the possibility of price falling is higher. So if you have used the higher time frame to determine your signal, if you check the lower time frame, you use the lower time frame to fine-tune the signal. Okay, to fine-tune the signal. Now look at it here. Okay, now when you see what has happened there, you will see the stops. You see the accumulation of stops more clearer. Okay, you can see the accumulation of stops more clearer. Now this is what I mean by fine-tuning. Look at what is here, and when you fine-tune, it makes it easier for you to know the extent to which if you want to place your entry, your entry will be more clearer. Look at on the 4 hours chart, look at where we are placing the entry. Yeah, well, if you are using the 1 hours chart to fine-tune and to get a clearer entry, okay, look at what will be happening here. Okay, you have this doji. Okay, or when you look at this candle, this is a reversal candle. Okay, now followed by this bearish candle. Now look at this, is another inverted pin bar. You can see more signals. So you have clearly 1, 2, and 3 signal here. Okay, that shows that we are going to be having a down move. Okay, so with this, you can easily place, you can see that this candle was able to make halfway of this candle of this doji, and this one inverted pin bar is also able to make halfway of this particular candle, this bearish candle. Okay, you can see it clearly. Then so with this, your entry with this one will be around this area. It's going to move up. Can you see? It's going to move up to somewhere around there. Around here. Can you see? It's going to move up to somewhere around there. So this is what we call fine-tuning. Okay, so then you can determine your stop loss, where your stop loss will be, which is around this area. You see your stop loss, we have to move because this area is an area of rejection, so it has to move away from that area. So it's going to move up a little, then you measure it, then you measure your take profit. So in this case, it's going to be 1 to 1. Now, even without measurement, there are some things that you can easily know where your stop loss and your take profit can be. Just the same way we determined your stop loss. That okay, your stop loss will be around this area, which will be away from this rejection area. Okay, your stop loss will be around that area. Now, where will your take profit be? One of the places where your take profits can be are also rejection areas. Okay, for instance, this area here is one rejection area. This is another rejection area. Okay, let's delete all this so that we can be clearer. This area is another rejection area. You can see the stops here on the same area is another rejection area. So all those areas that you have those rejections, okay, these are area of stops. This area can be one of your take profits. This area can also be one of your take profits. This area, you can see this area where you have these stops. So all these stops, 1, 2, 3, these are where you can make your take profits to be. And you can see price clearly got to those places. Okay, so once you begin to go away from all those areas, this area too could also be part of your take profits, take profit, take profit. But you know that this is just a retracement. Okay, so your take profits, you can measure your retracement. Okay, some people measure retracement using Fibonacci. Okay, you can use Fibonacci to determine the extent of your retracement, whether it's going to be 25%, 50%, or 61%. Okay, so maximum retracement that I usually go for is 61%, minimum 25%, and average 50%. Okay, so all right, so but I usually don't use Fibonacci. Okay, this is what I use. I use the areas of stops to determine my next level of take profit, because when price gets to those areas, price are usually rejected, or immediately price are taken out there, they are also rejected. Look at what has happened here. You can see that this stops in this area were taken out using this candle, and after using this candle to take it out, look at what happened. Okay, even here, when these two candles took out this particular candle, okay, let me increase it. When these two candles took out this particular candle here, what happened? Price was rejected upward. Okay, price was rejected upward. So those areas of stops are important to me as my take profit or stop losses. Okay, they are important to me because price rejection will always occur in those areas, and I don't want to lose whatever I have gained. So I will ensure that I place my take profit somewhere, like somewhere around here, just before the takeout of this. So I'll be 100% sure that price will get to this place, and even including this one, this is where I'll place my take profits, somewhere around there, just not the exact points, so that price can take it out. And immediately price takes them out, look at what happened. You have, what do you have? A standing pin bar. Okay, and I told you, what do you need? You need an halfway through. Okay, you need an halfway through of this. Now the halfway through was gotten through this candle. Sorry, excuse me. The halfway through was gotten through this candle. Okay, through this candle, and it's even moved past an halfway through. So, but where will your stop loss be if you want to take a buying move? Yeah, where will your stop loss be? Your stop loss will be somewhere around here. Okay, just this area. This area is going to be your entry point. That's halfway through of this candle. Excuse me. Okay, so now this will be your entry point. What level are we going Yeah, it seems this level is too much, so let's take it to this level. Okay, after the takeout of this, then this area here can be our next. So this area will be our stop loss. So this will be our stop loss. Okay, all right, so then you can measure it, then look for your take profits. Let's see if we can quickly do that. Just measure double of your stop loss. So this will be first. Like I said, it is not compulsory that it has to be double of your stop loss. What is much more important is the stops, because when we start getting to areas of stops, there will be price rejection. Okay, but for this lesson's sake, let's place. Okay, so double. All right, so double will be around here. Okay, so our entry, then our take profits, and price was able to get to our take profits, double of our. Okay, so but what is very important is you can see here that we have this area. This area will be an area of support. Now you can see that when the stop this when these stops were taken out, what did you notice? It was just very small. Okay, very small. Sometimes it can be very small. Okay, sometimes it can be very small. You can see this stop here. After this stop, taking out this stuff, including this area, so you can see very small. Okay, now, and also touching this, look at this, you can see how exact it is. This spot here, this one, this candle, and this candle, you can see very exact, and we have a bounce. But what happened? It has taken out some major stops. These are the stops it needed to take out. It was coming, taking them out one after the other. Okay, taking them out one after the other, taking them out one after the other. Okay, and taking these ones out. So clearly, after taking these three levels of stops, you will automatically know that there is likely going to be a reversal. Okay, so you can see, and when the reversal occur, you will always have a signal that follows it. Okay, we have a signal that follows it. Now sometimes you may miss the signal. Let's assume you missed the signal. Okay, or the signal was not clear enough, because from what has happened there, the signal is not clear enough. Okay, it's not clear enough. Look at stops were taken out here. After taking out all these stops, what happened? It created more stops in this area, and then used this candle to take it out. So as price was coming down, it was creating more stops. Okay, it was creating more stops along the way. Then use this candle to take them out, to take this stop out. Okay, now forming this standing pin bar. Then you need what? An halfway through. Okay, so now if you missed any signal in this case. Where else can you find the signal? It is another important point that you need to factor. And the next point you can find a signal, okay, is here. You will either look for another pin bar or a bullish engulfing candle, and this is where you found it. Sorry, excuse me. Okay. What? So look at. Let's assume that you missed all these entry points here. After this pin bar, you missed all this. You missed this. You missed halfway of this. And the next thing was a bearish candle followed by a bullish engulfing candle. Now, in this case, you may, because the probability of it getting to halfway, you can be lucky. Immediately after this bullish engulfing candle, you may be lucky like this, that is having nearly 50% retracement, the halfway through. Okay, so your entry point will be around there. Okay, you can be lucky, but sometimes immediately after this bullish engulfing candle, the next candle coming out will just be somewhere around there, just 25% move, 25% into this bullish engulfing candle and up to the sky. Okay, so but if you are lucky, you may have an halfway through, but the probability is low. Okay, so these are ways to which you can easily determine where else, if you have missed a trade, where else can you enter. You look for either a pin bar or a bullish engulfing candle. You can see it also happened here again. This candle engulfed this, and an halfway through happened for you with this pin bar. Okay, it happened here again. After this retracement, look at what happened there. You have this doji, okay, followed by an halfway through. So you have an entry here. Okay, push to the upside. Okay, so those are ways to which you can determine where next can be your entry point. You will always wait for the next what do you call it, candle. You always wait for the next candle. I gave you those candles. It is very important that you should go through all the teachings that I've given you in the past. It's very important. Most of the teachings that I've given in the past are inspiration, direct inspiration. Okay, so they are very important. Here I gave you the candlesticks that I use to determine price reversal. It is very important. Okay, I give it to you here, so go and watch it. Okay, now a lot of people have not taken their time to watch this. Okay, it is very important that you go ahead and watch it. That will help you. So to know the kind of candles that you need to know to have reversals, like this one here. Okay, your bullish engulfing candle, this candle engulfing this, your pin bars. Okay, so they are very important for price reversals when stops have been taken out clearly. All right, so that is for that. I'm not sure we'll be able to cover up those things that we actually want to cover. Even this one that we want to cover today, I'm not sure we'll be able to cover it. Okay, but let's quickly look at it. All right, so now look at what has happened there. Let's go to 4 hours chart. Okay, now this is what we saw the other time. It's excluding this area, this area is not part of it. Okay, this area is not part of it, just this area. So we want to know what's happened here. Okay, this. Okay, this. Okay, let's see, on the 11th to 18th, 11th to 18th, what chart is it? 4 hours. Okay, let's see, 11th to 18th. Okay, this area is there. Okay, what we just want to see is here. Okay, it's from here. So why did we have this reversal? Just like I've explained to you here. Now look at what has happened. Like we said, from your checklist, support or resistance. I'll change this to all resistance. Okay, so in this case it is going to be resistance. Okay, resistance is like a ceiling. Okay, so this is our resistance here. You can see it clearly. Now the good thing about this is that we have price coming very close to the resistance, and I usually call this what? A miss. I give those that are in my Telegram group, I give them a test, a quiz. I call it a quiz. Give them a question concerning what a miss is. What is a miss? And a lot of them got their all the persons that answer the question got the answer correctly. Okay, so it shows that you are following. Look at, so what are the function of the word miss in the strategic day trader analysis? Answer 1, causes retracement and moving of stops from one level to the level of the stops. Okay, so first, causes retracement. Okay, so what is the retracement? You can see this miss. There is a miss. The miss I mean is that price did not get to this area of resistance, so it missed the clearing of this stop, the stops that is here. This particular movement missed the clearing of the stops that is here. Okay, even though it has cleared these ones, okay, it has cleared these ones, but it missed the clearing of the stops that is here. That is what I called a miss. So there is this gap here is what I now termed as a miss. So this miss will cause a retracement. You can see there is a retracement of price. Okay, there is a retracement. So, and what is the next thing there? I said and moving of stops from one level to the level of the miss. Okay, moving of stops from one level to the level of the miss. This is what I mean here. What I mean here is that these stops that you see here, okay, these stops that you see here, because of this miss, these stops that you see here have been moved to this place. Okay, it is a logic. I want you to understand that logic. It is a logic. What they are trying to do is that they want to clear this stop. Okay, but instead of them going ahead and clear it all at once, they moved these stops down to this place. Okay, they moved it down to this place. How did you know that they moved it down to this place? What usually happens is that traders generally usually like to place their stop loss around these areas that we have stops. Okay, for instance, if the traders that are selling in this area now, where they will place their stop loss will be around here, because it has passed this stop 1, stop 2. So maximally they place their stop at this point here, which they believe that, oh, price cannot go up to that extent. You can see, so stop 1 is cleared, stop 2, please let me maximize it very well. Okay, so that you can see it. Okay, now look at this. So they pass this stop 1. If you pass this stop 1, you pass this stop 2, you cannot get to stop 3. So they will place their stop loss maximally around this area where you have another major stop. So they believe that price will not get to that place. So naturally, traders place their stops around the area of another major stop. Okay, so now if they are placed their stop around this area, now they discover that, oh, they want to sell, they want to carry out another sell again in this area. What they will do is that they will move this stop loss to this place. So they are selling again now. So they have moved their stop loss. You know, they are trying to take profit. They are taking profit like that. What it means is they are using trailing stops. Okay, so, oh, in this case now we can move our stops to this place. They are selling again, they are selling, so we can move our stuff to this place. So all the money in this area, they believe that they have eaten it. Okay, so they move their stop down to this place. Okay, so after moving their stops down to this place, meanwhile, what this means is that this one will retrace, then come back to take it out. If you check what has happened here, you will see that it's going to be a takeout. So now the takeout is that it's going to first take out this one, say, even including these ones here where the red line is. You check it out. Can you see? Can you see what has happened? So they believe that people that place their stops in the area of this red line will have moved their stop to this place. Then they will do what? Take it out. Okay, so number one is that this miss causes a retracement and makes traders move their stop from one level of stop to the level of this miss of the area of miss. Okay, move their stops from one level to the level of the miss. So that is what has happened there. So they move the stops, their stop loss, to the level of the miss. Okay, so which is what they will do here. Then they will take it out. You can see they clearly take it out. And after taking out all this bunch of stops, including this one is there, what did they do? Okay, so what did they do? They drove the price down. Now let's look at the signal for the driving of the price down. Okay, now like our checklist have said, tick the resistance. Okay, confluence. Now confluence is an area where price has been rejected in the past. Let's see if we can have that. Okay, now look at this place. Price was rejected here. You can see price tends to go up, price was rejected there, price tends to go up again, price was rejected down. So this area are areas of confluence of price rejection. Okay, okay, you can see, and this is a more recent. You can see price still rejected here. Okay, so and the next thing was a takeout. So you have confluence showing clearly in this area. Okay, then you have the takeout of stops, which is the next thing. Then you look for your price action. Price action, I showed you price action through the videos that you have here. Okay, one of it is the bearish engulfing candle. You can see clearly that this is a bearish engulfing candle. This candle engulfed this bullish candle completely. If you look at the size, you can see it. You can see it clearly. Okay, this candle engulfed this candle completely. This candle is bigger than this candle, so this is an engulfing, bearish engulfing candle. Okay, so you look for halfway through into this bearish engulfing candle. The next candle must get to halfway. With that, you can be sure of, you can be more safe in placing a trade. So look at this candle. It went halfway into this candle. This next candle moved halfway into this candle. So all you need to do is to just place your entry around this area. So you place your entry around this area, okay, which is the halfway to this bearish engulfing candle, and your entry, let's place it as blue. I will not do any measurements right now, so just then your stop loss, you look for your stop loss. Okay, you look for your stop loss, use the areas of stops around this area to determine your stop loss. For instance, you can decide to say normally traders want to place their stops around this area. Okay, so you can decide to take either this or move away from this. Just let's say like 2 levels. This is level 1, level 2. So you can decide to place your stop loss somewhere around after this level, you can say somewhere around there is okay. Or somewhere around there is okay. Okay, and sometimes you may decide to also say you want to use this place. You can decide to use this place as your stop loss somewhere around there, which will make your stop loss to be very big, and that will be too much. So you don't need to make your stop loss to be very big. Just somewhere around there is okay. Don't make your stop loss to be very big. Okay, so but with the strategy that I'm giving you, the probability of hitting your stop loss is going to be very good, because we have clearly taken out major stops. This is a miss, and after that miss there is a clearance. Okay, there is a clearance. Okay, there is what? A clearance of these stops, and you have confluence, price rejection here, price rejection here, price rejection here. Okay, now the takeout of all these stops and a price action. So you look for your price action. You look for your price action. Which is a bearish engulfing candle. Okay. Now, because of our time, we'll continue from there tomorrow. Okay, we'll continue from there. So you know how to calculate your take profit. Like I told you, your take profit can be, instead of doing the normal calculation W of your stop loss, you can decide to use the areas where you have stops. So for instance, I can decide to place one of my take profits around this area. This is my first stop here. Next one can be there's going to be take out of this area here. It's okay. Okay, the next one can be somewhere around here before the take out of this. Okay, and so on like that. So that is the way I determine my take profits. So I use levels of stops to determine my take profits. Okay, after the double of my double of my stop loss. After you have determined the double for stop loss, the rest you can use the stops before the clearing of the stops as your take profit. So that will be easier. So now there are some things that you need to understand, is that don't always believe that you will want to ride the whole profit in the market. Just it is better you have specific profit targets. Have specific profit targets. Okay, now after that, reduce your investing capital as much as even 80%. So the remaining 20%, or reduce it to 75%. That is what you've invested. If you have invested maybe $100 to make a trade, once you are in profit already, you have earned double of your stop loss. Just reduce the risk by 50%. So you take out 50% of your capital and 50% of your take profit. Take them out. Then leave 50% of your capital there, or even 25% of your capital and 25% of your take profit. You leave them there and let the market ride the rest. Okay, follow the market as it's riding the rest of the profit using the levels of stops. So don't leave all your profits and your capital that, oh, you believe that price will get to all these areas, then you now leave it to begin to ride on. It means you now lose. Okay, I said the movement of price okay, this is it. I said I gave the signal, I use the 15-minute time frame, and I gave the signal. Look at it here. Okay, so I said this is a miss. Look at this, is an area of stop, this is an area of stop. Okay, so we have two levels here, a support. Okay, we have a support here and we have a miss. You can see the miss. It is clear, it is glaring that this is a miss, that they could not get to this place. They intentionally missed this spot. So normally they were supposed to come and take these ones out. All the stops here, they were supposed to come and take them out. But what did they do? They missed it. They missed the clearing of the stops and now took a retracement. Okay, they took a retracement. After taking the retracement, what happened? They came to take this out, because a lot of people that place their stop losses in this area will have moved their stop losses to this area, because they believe that, oh, they are already selling, so all the profits in this area up to this area, they want to take it. So they will place their stop loss around this area. Then they believe that they are still riding the market on. So while they were not there, this happened in the midnight while people were sleeping. So for those that did not use trading stop or did not use stop loss, what will happen? They came to take all the stops here out using this. So this happened Nigerian time at midnight. They took out all the stops here, and after taking out the stops, they wrangled and take out all these ones here, including this. You can see they took it out. So I now gave the warning. I said from the signal given on this chart, okay, I even gave out this place, this area. You can see this area, there is also a stop in this area. There are stops here. Okay, so I knew that they are going to take it out, and look at what happened. They took it out. Look at the ride. You can see the ride. They took it out. They took it out. So I gave the warning already. Okay, so now After that, okay, this was where I gave the warning. This was where I gave the warning. This was where I gave the warning. Okay, you can see I already should give the warning before it happened that this was the miss, and they came to take it out. So even after taking it out, they're still going to reach this area. They need to take it out. So, and they got there. Okay, so after getting there, I now said that from the signal given on this chart, market sold off as expected to the last red curve, which was this one, but the buying up may be slower as signals are strong, sell signals are stronger. Okay, and truly that was what happened. I will show you. So if you use the 15 minutes chart here, so this was the event. This was the event. Okay, this was the miss. This was the takeout of this miss. This was the takeout, and this to take out the last what do you call it, the last stop in that area. All right, so now after that, look at what happened. It took them, this is around from here, that is 1:30 on the 26th to 27th, 1:30, 27 should be, that will be 24 hours. You can see after 24 hours plus about 5 hours, so that's 12 plus 24 plus 5, that's 29. 24 plus 5, 29. So about 29 hours, approximately 30 hours, about 30 hours it took them before this point. Okay, now this upward move, you will have seen it that why will they have this upward move? They have created, you see, immediately after taking out major stops, the next thing is for them to reverse, to take out some immediate major stops that they have created along the way, which is what they came to do here. Okay, which is what they came to do here. So, and that was the ride, and they ensure that they completed the ride in this area. Look at, they completed the ride, they completed it up to this area, and even attempted to take out the stops, which is also possible. Okay, which is also possible. I don't know if I can go on because of time. All right, now look at what has happened here. Look at the pin bars. Okay, I already gave the warning. I said they are going to be slow. Okay, I said the buying process is going to be very slow, and they took their time. Now, those factors that will easily make you to know that there's high probability that price will actually reverse is that immediately after taking out this picture stop that was there, that I showed you, this one here, they have taken out all these ones, this miss and these ones, including this last part here. Okay, including this last part. Then I gave another signal that if price should get to this area, we could experience a bounce. Okay, a bounce around this area and this area, because for price to be going towards that extent, price has actually overstretched. The sales have overstretched their boundaries. So now let's look at what we can find here. Look at, if you look at what has happened there, how many pin bars did you see? Look at, this is one pin bar, 1, 2, 3, 4, 5, okay, 6, 7, 8. Okay, this is a doji. We have not even decided to say we want to count the dojis that are here. Just counting the pin bars that are here alone, we have up to 8 pin bars. Okay, those 8 are numerous enough to move the price upward. So those are the factors that you look at. Okay, your price action. Okay, you can see the buying process very slow until this movement. All right, and this movement also corresponded with the news that came out, which was on the FOMC rate hike. Okay, so it prompted the move upward. Even in some other currencies like the GBP USD, that's the GBP US dollar. It also happened. Look at the move. Okay, so okay, this was the move, the FOMC. This was the move. So but clearly, if you can see that the move that happened there was not as clear as that of the Bitcoin. When you look at what has happened there, okay, we just have a bounce. We have a bounce from this area. Okay, now when you look at the bounce, you can see that we have stops here. Okay, these stops, this candle did not touch or clear the stops that are here. That is another miss. Planning for another day, guys. Planning for the future, in which they will come back and take out these stops here, including all these ones and including these ones here. You can see the stops here. So these are plans for the future. Okay, so this is how you determine where price can go easily. Determine where price can go easily. It is not as difficult as many people think. What price is after is taking out of stops. Okay, taking out stops, and it uses the method of a miss to also take out those stops. Now, another important point that we also look at when we were carrying out some other now, from this chart, Bitcoin is still owing us. Okay, Bitcoin is clearly owing us. I'll show you this area. So that is why I have so much hope that Bitcoin is coming back to rise, and we get to as much as 30. We get to at least back to this 32,000, even right past this 32,000, and come to as much as 37,000. Okay, 37,000. This area here. So 37,000. Okay. I will explain to you. There is a structure here. Okay. There is a structure here. You can see it. Let's use another color so that I can differentiate it. All right, there is a structure here, and clearly I let you understand that once they have taken out a structure, which is either the bottom structure or the top structure, they are coming back to take the other parts. Okay, so they are still open when we Bitcoin come to take this other part. Okay, now when we look at what is happening here, you can see clearly that after the takeout of this major structure, the next thing they came back here and consolidated again. Okay, so if we look at the levels of structure, should we use the daily? Let's check the daily. Okay, sorry, I was just checking some of your charts that I'm seeing here. Okay, all right, so now look at the level of structure that we have here. So we have level 1 taken out, level 1, level 2, and then level 3 taken out. So level 1, level 2, let's use this as level 2, then use this O as level 3. Okay, and after the level 3 we can have a buyout. Okay, so now you can see clearly that after taking out all these structures, look at so many stuffs have been taken out. A lot of stuffs have been taken out. So we need, it is already getting to a point where we need to have a buyout. And you see, some of these structures used to look alike. Okay, sometimes when I want to determine what is happening from in one structure, especially maybe in a higher time frame, sometimes I go to a lower time frame to check the kind of structures that resembles, that look alike with what is happening here. Okay, so you can also use that to know what is going on. Look at what has happened in these two candles that was there. Look at, after this takeout of all the levels that were here, okay, look at what price did. Look at the movement. Price came to take out this. Okay, price came straight to take out this level and even included all this level alongside with it. And when you look at it, even though they are not so much alike, but they still probably look alike. So if you check the 4 hours, sorry, let's check the daily. You will see that the daily chart looks like what we saw on the 1 hour chart. So which is also giving us a possibility of, after taking out this structure here, the base structure, we need it to take out this top structure. But what did they do? They came to form another structure down here. before trying to drive the price up. Okay, so now with what has happened there, look at even on daily chart. Let me show you on daily charts. Look at what has happened. It still follows our strategy. Okay, you have a pin bar that shows you a drive up. Okay, you have a pin bar that shows you a drive up. Now, do we have an halfway through? Something like that. You can see this is the top, this is the midpoint, so you have almost an halfway through. But all this happened, look at, there was a retracement here, and there was a sell off here up to this point, then the buyout. So you have an inverted pin bar, which shows clearly that what they did here has now become a retracement. This is now a retracement of this movement. This one is now a retracement of this movement. Okay, so some people will use Fibonacci to calculate the retracements, and based on the retracements, personally, I told you I don't use it, but if you will have to use it, let's see, where 61%, at 61% you have a pin bar that gives you a signal. Okay, it gives you a signal that, oh, you could go long. All right, so but you know what I do is that I want my stops to be cleared. So, and once my stops are cleared, this is what I do. These stops that are here, were they cleared? These ones, these two, were they cleared? This is it. They were cleared. You can see that they were cleared. Okay, so all you need to do is to place your horizontal line. Can you see? You can see these ones were cleared, even though it is tiny, very small. But after clearing it, what do we have? We have a pin bar, we have an halfway through. Move to the upside. So now let's assume that you have missed it. You have missed the entry for this buy up. So what do you do? Okay, what do? What you need to do is to wait for another retracement. You don't need to rush into the market. Okay, you don't need to rush. So wait for retracement. Allow the price to fall. You can use your lower time frame to determine that. Okay, allow price to fall, then look for a pin bar. You can see that we experience such things in this area. Okay, look at what has happened there. Switching to a 15-minute time frame, you will see it clearer. They're taking out of the stops. Look at what has happened there. These are stops in this area, including this one. Okay, now look at what happened. These are stops. Look at the level of stops that is here. So many stops that is here. Okay, now we have another stops that is here. But look at what happened. This candle did not get to this place to come and clear these stops. That is the miss. That is the miss there. So this miss will give you the opportunity. Sorry. this miss here, what it means that buyers, traders have removed their stop losses from this area and place it here. And you know, after the taking out of a miss, what is next? It's going to be a buy, a reversal. Okay, it's going to be a reversal, so you watch out for the reversal candles. So this level of stops were moved to this place, so they moved them there, they moved them here. Okay, they moved the stops there, here. So after the movement of these stops to this place, there is a retracement up to this extent, up to this extent, there is a retracement, and after the retracement, they took it out. They took out this bunch of stops and also this bunch of stops at the same time. Can you see that? Took out this bunch of stops and this bunch of stops at the same time using this candle. And you now have a pin bar. Now I told you, after the pin bar, what is next on your checklist? Halfway through. After your price action, what is next? Halfway through into the pin bar. Now, do we have an halfway through into the pin bar? Do we have an halfway through into the pin bar? Now, the first candle that came in did not give us the halfway through. You have to wait. If you want to take the risk, you can place, instead of placing 100% of your capital that you intended to trade, you can place just 50% or 25%. Okay, so then anytime the halfway through comes in, then you can place more entry. So you can see this, after 1 2 3 4 5, the fifth candle came back to give us the halfway through. So the fifth candle came back to give us the halfway through. So after the halfway through, what do we have? We have a buy up. And even here, look at this candle gave us the halfway through. We still have another signal, which is a pin bar, showing us that this is a good move to place our entry. Even after this, you still have almost an halfway through into this pin bar too. So let's assume you have missed your point here. You still have another opportunity here, even another opportunity here before the buy move. So those are the ways to which you determine how you can know where your price is going. Wait for the structure. The structure, if you don't see the structure, don't enter a trade. It is better you don't place an entry than for you to place an entry and begin to lose your money. Wait for the structure. Let the structure come out. Then let there be a takeout, a clearance of the structure. Wait for misses. Okay? Let there be a miss. And after the miss, let it clear both this miss and also the stops that the miss intended to clear. The miss has a mission. The miss was to clear this, but the miss missed the clearance. So what you do is to clear this one. Wait for the retracement, then let the retracement come back to clear the miss and also clear the stops that the miss intended to clear. Once you can have that, look for your price action candlesticks and get an halfway through and make your trade. So we only have exceptional cases where, like this area are exceptional cases, these area are exceptional cases where you have, where the buying will be slower, We take many hours before you can see. After you have this, you did not even have an halfway through, so you cannot place an entry using this. Okay, so you wait until you can get an halfway through. This candle give you the halfway through. Okay, but they still drive the price down. But if you look at where you're going to place your stop loss will be far away from this area. It's not going to be close to this place, so it's going to be somewhere around there, and price will likely not get there. You see, this trading strategy gives you a very high probability of price not getting to your stop loss area. Once stops have been cleared and you have gotten the exact point where stop needed to be cleared, the probability of price getting to your stop loss is very, very slim. Is very, very slim. Okay, so that is how I trade. Very easy. So I wait for the structure. You don't need to rush. Wait for the structure. Let the structure happen. Then use the structure to determine your movement, the direction of price. Very easily. Okay, so that is what I do. It is very easy. Very easy. If I don't see the structure, I will wait. I wait for the structure. You can see. So do the look at the structure very well and use it to determine what is going to happen next. So I'll find time to say how we can be monitoring price, if possible, on a daily basis. Probably getting a recap like this on a daily basis, but I will not be spending more than like 30 minutes or maximum 1 hour. Okay, so that we can always have a clearer view of the structure and how price determines its movement. So with that, you can easily determine the next thing that will happen. If you don't see the structure, don't place a trade. It is as simple as that. Okay, so because this market will always be there, as a trader you are not concerned whether price will be rushing up or price will be rushing down. Yours is that wait for the structure, let price do exactly what you want, then place your trade. Don't let price dictate to you. I've always mentioned this. Let you be the one to dictate to the price. It is very important. Don't let price dictate to you. Be the one to dictate to price. Let price do your bidding. Let price obey you. And that is how you can win in the market, having a 98% probability or winning rate. 98% winning rate. So that is how I trade. So if you have any question, you can send me your question. You can send me your question or join the Telegram chat. The Telegram chat is in the description below. Okay, it's in the description below. Thank you for the likes. Thank you for the likes. I appreciate that. Okay, thank you. So we see, I promise to come around tomorrow. Okay, I promise to come around tomorrow, so I would show you some other things on how to solve these prices. It is still the same strategy, but it is going to be easy. It's going to be easy. Okay, all right, so thank you